Hey everyone, welcome back to my channel. My name is LaKiesha and today we're going to talk about what is the best day to trade. This question actually came from someone who sent me a DM on Instagram asking this question, and I said, hey, let me just make a video on this so that way everyone else with the same question can get the answer here. All right, so as you can see, I got a lot of stuff on my screen and we're gonna go through all of it. Okay, so when you're looking for the best day to trade, one thing you need to keep in mind is you need to look for big candles because big candles signify big volume. And when there's a lot of volume in the market, that gives you the best opportunity for price to push in the direction that you want it to go. So let's go ahead and go over to the chart. All right, so here is a US 30 chart right here, and as you can see, I'm currently on the 30-minute time frame. Let's go to the hour. It really doesn't matter which time frame you're on, but basically if we look at the market, we will see that here is a really big candle right here. We also see that this is also a really big candle, and then we also see that there are a lot of really big candles up in here. And then if we go over, let's make this bigger actually, it's a little hard to see. All right, so like I was saying, really big candles right here, really big candle right here, right here. And then if we look at this area, we can see these are really small candles compared to these candles right here. So basically you have to look for volume inside of the market, and it's gonna lead me to my second point, which is basically you need to see when there are times of volume in the market. So this is where this big table, or this little table actually, is gonna come into play. So one thing when it comes to trading either the forex market, stock market, whatever market you're trading, there's gonna be really high volume times and then really low volume times. So say for instance, if you're trading the London session is 2 a.m. This is all in Eastern time, USA. But it's going to be 2 a.m. to 11 a.m. for London, and then there's New York session, but then there's also New York SC, which is basically when the stock market is open. So NYC is going to be 8 a.m., but then the stock market is going to open up at 9:30 a.m. And then you're going to have that market close at 5, and then you're going to have the stock market close at 4. And then there's also the Tokyo, people also call it the Asian session. It also has the Sydney session. There's just a lot going on inside of the session, but basically it's going to be roughly 6 a.m. or 6 p.m. And I say this because in the forex market, or if you're trading commodities like gold or US 30 or something like that, basically you're going to see that there's a period where there's no volume at all. And that's basically like a break in the market, and that time depends on the market, but roughly it's like, it could be as little as 15 minutes. It could be as long as maybe 45 minutes to an hour. So a lot of times you're going to see that market, or that particular market, have some volume around 6 p.m. Even though there may be even more volume at 7 p.m. during this particular session. And then that session closes at 4 a.m. So you may be wondering, well, why is this even important? And it's important because you're going to have the most volume in the market when the market opens, and then you're also going to have the most volume in the market when that session closes. So let's just take New York for exchange, because this is the session that I trade. So for instance, there may be some volume at 8 a.m. Eastern, but there's even more volume at 9:30 when the New York Stock Exchange market opens. And then one other thing that I've noticed is that at 11 a.m. Eastern, when the London session is closing, so roughly 30 minutes to an hour before that, I see a lot of volume pushing in the New York session, and that is mainly because the London session is closing. So a lot of times you will have some overlap between the sessions inside of whichever market that you're trading. So it may have an effect, it may not have an effect. It really just depends on the market. There's so many different scenarios. But when I'm looking at things in New York stock, at the New York Stock Exchange market, so say for instance, if I'm trading like the SPY, which is basically the S&P 500 index in the regular stock market, then I may see a push around this time that London is closing, because London is closing and there's an overlap between the London session and the New York session. And then the same thing may happen. Now, I don't know these times perfectly because I'm not trading the Tokyo session and the London session, but there is overlap between this session and this session. And when the Tokyo market is closing, there might be a slight push in the London session because of that overlap. So it's just really important to understand that you're going to have the most volume when these sessions open and when these sessions close. And that's one of the things that has really helped me avoid times of the market that I shouldn't be in it, because low volume means that there's a lot of opportunity for price to not push in your direction. You may be stuck in a consolidation, which basically the price just goes nowhere. So let's scoot over to the chart once again. Okay, so this is an example of what I'm talking about. So I'm going to put a box on consolidation. You can see that these are really big candles through here. And then right here, these are super tiny candles compared to these other candles here. So this is basically during the Tokyo session. I don't trade it, but you can see that the volume is really tiny compared to the London session or the New York session, which is here. So actually, let me scoot over, which is here. So you can see that this is 11 a.m. I'm on Central Time, but it is 12 p.m. New York time. So there's bigger candles here than there is, let's say, at 11 p.m. Eastern time. So that's going to be a really important key, or a really big factor that you play into your trading. If you want to, you can go ahead and screenshot this table, because it's going to be really helpful for you in the future as a reference. And then another thing I want to talk about is a couple of indicators. So one of the indicators that you can use is this volume indicator with alert. Now, I don't use this anymore because I'm no longer using a whole lot of indicators. I do like the sessions indicator, but it's not really an indicator. It's basically like a tool. So if we go to indicators and we go to volume with alert. Okay, here it is. Whew. Took a minute to find, but basically volume level with alert, then that is going to be something that'll look really cool. I have two of these things up here, but basically play around with it, see if you like it. It's not something that I use anymore, but it's going to be really, really helpful for you. And the other thing that I like to use is the sessions indicator right here, where there's a whole bunch of these things. So go ahead and find one, but you can see that it has the London session, the New York session, the Tokyo session, and the times here. So you could adjust it based on where you are in the world. And then as you can see on my chart, I do have the London session and the New York session checked off. So pretty much I have my London session in blue, and then I have my New York session in green. And then there's this overlap period where it's kind of like a blue-green type of color. And basically this helps me. Now I don't use this all that much because I'm mostly just looking at the New York session, but it is helpful to know the times in the market where there's going to be a higher probability of having volume in the market. And like I said, volume is very important because that is going to be the thing that pushes price into your particular direction. And if it's the right direction, then it's going to be great. If it's not, then you'll probably get stopped out really quickly. So always use stop losses. So pretty much that is going to be that right there. And the next thing, so basically the best days are going to be the days with more volume. So as you can see, the overarching message here is going to be volume, volume, volume. So basically one of the things that could cause a particular day to have more volume is news. So that's going to be breaking news, or sometimes when the chair of the Federal Reserve have a speech. So that is Jerome Powell currently here in the United States. That is going to be something that could potentially push volume in a direction. So a lot of times before these data releases or these news releases, you will see volume kind of consolidate. It'll have really small candles because basically all of the market players are waiting for the speech, waiting for, something that's pre-planned to happen before price goes in any direction. So that's really important to note. And then another thing is going to be a data release. So basically, economic indicators of inflation. Inflation is obviously something that's really important to any economy, the world economy. So for the United States, there's going to be CPI, which is the Consumer Price Index. And basically that is a monthly indicator for inflation. Basically, it measures inflation. It takes a basket of goods. So it's not just one thing. It may be like, for example, it may be something like, bread, eggs, milk. So just common things that people use, and take the average of those things from one month to the next and see what the difference is. And basically that, a whole bunch of other calculations later, they're able to come up with a value for CPI to measure how much inflation has changed from month to month. And then they also measure this change year to year. So that's going to be really important. Another thing is called the Producer Price Index, which is also known as PPI. This is also monthly. I believe they also have an annual one as well. And it's mainly because this is kind of a predictor for CPI. And basically what this says is you have a whole bunch of companies or manufacturers that produce goods. And if it's more expensive for them to produce those goods, of course, they're going to pass those costs on to consumers. So if the producers experience higher costs, then that means that the consumers can also experience higher costs, which is why this PPI metric is a predictor of CPI. And it also measures the change of inflation as well. The next thing is NFP, which is also known as non-farm payrolls. It does not include farm laborers because it's non-NFP, and then it does not include government workers. So basically, this is just a measure of the pay that people are getting in these other roles. There's a whole bunch of calculations and things that go into it and how they do it, but basically, this NFP metric is produced every single month. It releases the first Friday of each month. So that is something that could really move the market, pretty much all markets from what I've seen, in one way or the other. And this is going to be high volume time. So you may be thinking, well, I really don't want to trade these like really erratic news events and stuff like that. And that's totally okay because I don't do that all the time as well. And one thing I do is I wait, see what the numbers are going to be, see how the market reacts, and then maybe an hour or two, or maybe even the next day, then maybe I'll trade. So that's just kind of something that I do, but it's really important to understand these things because these things are really going to affect the type of volume that you see inside of the market. And if you want to know more about these things and do your own research, then go ahead and go to Forex Factory. There's so many other places, but this is just a very simple one, and it gives a lot of information. And then obviously you could do your own research and figure out what these different things and other things mean to you. So, days of the week. So this is pretty much from my experience in the markets that I've traded, from what I've seen, which days have more volume in the market than others. So first, Sunday is going to be low. And Sunday, I have this here because if you trade Forex or some other market like commodities, gold, silver, etc., then you will see the market open on Sunday night US time, and the volume is typically low. Sometimes, depending on what's happening in the world, you may see more volume, but most of the time it's going to be really low volume. Next, Monday. So Monday is going to be relatively low volume, not as low as Sunday, but basically it's a low volume day. And then in my experience, Tuesday, Wednesday, and Thursday have been really high volume days. So high volume, like I said, is important because it gives price an opportunity to really move, especially if you're on the same side of the market. And then Friday, like I said, we have NFP, which is the first Friday of every month. So at the beginning of the market day, there may be a lot of volume, but after that it may die down. So that's why I have high-low, because even on some of those Fridays where there's not a news or data release, then basically there still could be volume, but sometimes there's not volume just because there's a lot of profit taking from the market. So you may see big reversals on Friday, where say if it was going up and up and up all throughout the week, but then Friday it starts to sell off, basically people are taking their money and they're going to enjoy their weekend. So that's something I do as well. So that's pretty much that. And that is all that I have for this video. If you love this video, feel free to give it a like, comment, and subscribe, and I'll see you in the next video.